The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. Couldn't make it yesterday, and it was silly because I had an appointment that was changed from 9 o'clock to 11 o'clock. I didn't realize it until over the weekend. It was too late to do anything, so I couldn't be here yesterday. And what's interesting is that we're looking now at a Dow. Yesterday started off very weak and then had a good rally and then closed fairly weak. Today it starts off weak and it's trying to rally. The S&P is up $1.50 at 2,269. S&P is down just 6 at 19,819. The comp index, that's the very broad NASDAQ comp index, composite index, 55.48, it's up 7. The VIX is at 12.38. It's up 51 cents, but I'm going to be watching this really closely because until the VIX starts straight in the 13s and then tries to move to the 15s, selling pressure just won't last. And what's really important about this move, you can see it right here. Look, in the E-mini, which is up $1.75, the S&P. If you look at the 2277 round number high that was made 2 weeks ago, look at this series of highs. We've been here for over a month, just trading in this high-level consolidation range where we've rotated through different sectors. The financials have had a spectacular move. Then they just kind of stopped dead with slightly higher highs. Many of them pulled back. In fact, we'll have a look at them in a moment. Let me just run the numbers to show you that the 120-minute chart is in the E-mini is in this wedge formation. Couldn't break out above 2268.50. If it gets to 2271 or 73, somewhere around there today, that's going to be very good action. I think it's just kind of stuck trapped in this trading range. For the 120-minute chart that we discussed last week, we had made that 5. Let's see. We made the 5, and way back, it wasn't so far away. It was the 6th of January at 19,999.63, 27 cents away from the 20,000s. What happens is it pulls back very sharply to 19,770 in the 120-minute chart. That took us down to a trough D. But in the Chapman wave, we were looking at a 5, a Chapman wave 5, where it spiked up to what I call an X, peak A minus, at 11:30 on the 11th to 19,952. And then we had a 1, 2, 3. I'm anticipating we could get a 4 and then a 5 over the next day or two, going into a low. And then we're going to be looking at a market that says, all right, now we've got a resident chief in action. Well, let's see what happens after that. Because then the perception going from the November the 7th, November the 8th lows into the idea that businesses will be improved, the business atmosphere will be improved, was very, very prevalent. The higher interest rates allowed the banks, the financials, to have fabulous rallies. You've got 5 of the Dow stocks, Dow 30, are actually financials. That's really important. That's what helped the Dow become a leader. Now we're going to get the reality. What happens after this? And my suspicion is we're going to chop a little bit longer. But most importantly, what we're looking at here is if you look at the Dow in this perspective, you've got an arch formation that's turned into a lowercase m. But until the Dow breaks 19,700 support, you're in this chop sideways range. Now, what's really important about this pattern that I discussed a long time ago, I really mean a long time ago, back in late November, what I'd said was, if correct about this schematic that I drew of a long rectangle formation that had a strong, powerful move to the upside and could have a one-to-one move from the right corner of that rectangle, that targets the 20,200s sometime. My actual way of looking at this notation has always been to treat the declining highs and breakout as the level to watch, and that takes you to 19,900. Well, we went to 19,987 in the Dow. Now we've got a sideways range. Is there going to be a miniature schematic of this particular pattern that's unfolding right now? In other words, is this a leg up with another rectangle formation with a breakout to the upside? I say we can make it really easy. The Dow close above 20,090s just opens up, especially if the Dow closes over a 3-week period, maybe 5 or 6 times above 20,000. All of a sudden, in the vernacular, the word or the sentence Dow closes in the 20,000s becomes so familiar that a lot of people are just say, oh man, it's never going back to the 19,000s. I've just got to get in. And that's going to be very bullish. So until then, it's a sort of chop, chop, chop. Let's see what can happen. Now let's go to the numbers. You've got let me move this away. You don't need the 120-minute chart anymore right there. Okay. All right. So now what we're looking at is, move that to the side. There we go. So the parameters are INDU, the Dow trading at 19,817, down 9. I must hold 19,700, otherwise it's going to go quite a bit lower. And on the upside, 19,867, the 9-period exponential moving average is very strong resistance at this point. Oops, I would even say, oops, what happened to my chart? I would even say that within the context of, let me just move that away, thank you. Within the context of the sideways weekly pattern, a higher high would suggest that it's leg C up. That means about touching 20,000 stars, leg C up in the weekly chart, and we will have very strong support in 19,610 under worst case condition, at least for the shorter term in January, and it would be very positive. Meantime, 19,610 is the 9-period exponential moving average that we've got to watch closely if there's a breakdown from here. We are, in fact, in a short term sell signal on the Dow. Only below 19,700 does go to a sell mode. And we, in fact, for subscribers, we have a small short position in the Dow. And okay, and we have gold stock. We like that. We'll go through it as we move along. S&P, SPX.X is trading up $1.20. The high that was made just recently here at 22.8210. The close above that is very positive. My thinking here is it's just chop, chop, chop in a sideways range a little longer. 22.54, 22.51. That's going to have to be key support on any weakness. QQQ held very nicely, made an E/B daily chart. So far, leg C, weekly chart, acting very nicely. MACD is good. Stochastics holding at 94%, still acting very, very well. Let's go to gold as we're about to go to the break. Gold is up $2, and this is actually now. I don't want to rush through it. Beginning of the week, middle of the week, actually. Let's take our time. We'll go through this. I want to go through this and crude oil. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So I'm going to look at GAIA. I did some work on it during the break because I was asked to do it by one of our denners. I don't even know what they do, but they're trading at $8.80, up 10 cents. You have to book an appointment to get this long look. Today, the only action has been 798 shares. And yesterday, the whole day, we did 20,837. So any one particular person could just be the buyer. We actually own a stock like this in the newsletter. We got it at just, I mentioned it, so I better try to find it now. Let's see. Yeah, we bought it at just over $18. It hit $19.11 just 2 days ago. Today it's had a low of $18.40 something and a high of $19.07, and there are only 4,367 shares that have been bought and sold. And I did say it's an extremely light stock. It's really an ETF type thing, but it's amazing because it's acting really well so far. So yeah, I'm not going to say anything other than if anybody wants to look at something like this, you got to be aware that you can get in, but it's really hard to get out sometimes. You got to sell it when it's rallying if you're long. Actually, I wouldn't even think of shorting a stock like this, but you've got to sell it on the up move because it's really difficult to get your price. You look, it's at 880. You could say, I want to sell it at 881, and you can wait all day. It could even trade at 881, but you might not be the buyer. It might trade 10 shares. You want to sell 100. They might not want to even put it in. So okay, so back to the story. It needs to get to $9.35, the high that was made back in mid-December. If it can do that, then all of a sudden the high that was made in November of 10.07 becomes a target. I don't want to see this trading. It's got key support right there in the 820s. I would not like to see it close under 820. That would be not a good situation. All right. So far, yep. If you are long it, just be aware that. Well, I don't have to tell you. If you're long it, you know that you had to book an appointment to get shares. But I don't know what they do. GAIAM, GAIAM Inc. I don't know. But yep, not bad. I'm not. This is really a flag pattern with a high level consolidation. That's the reason why it really must not break the 840, 830 area, because then all of a sudden it lowers that whole flagpole, and then it's got the Eiffel Tower. It says, uh-oh, that was a single leg up. I'm coming all the way back down. So far, it's acting quite well. All right, let's go on with our story. QQQ, acting very well, needs to get above 123, what did I say, 38 was it? 123.38 starts a new leg up. Nice high-level consolidation within a channel. The up channel you can see within the weekly chart is a lot of room. So it's really the daily that has right here. This is the up channel resistance area, and it stopped dead today. It needs very quickly to break into the 123.30s, and all of a sudden it'll be open to the 123.37, 38 area. So support is at 122.31. IWM is trading here at 134.59. Just been stuck in this peak C1, C2, C3 in this down channel. Gets repelled at the Chapman wave inside track repellent zone. Now let's put in, for the first time I can start to put in, you see, we might be using time here. I'll know, today is Wednesday. I should know by Friday's close, I should have enough information to say, yep, I think I can see it. Because look, you've taken 1, 2, 3, 4, 5, 6, 7 weeks since you made that high back the week of the 9th of December. But it's very, look, this is the slightest decline that it's had in a long time. It's taken time rather than price. Now, because of the 9-period moving average at 133.70-ish, I'm just saying that it's held well. Day is young, week is young. We need to see what happens on Friday. But look how strong the monthly chart has been. So I think we're using time. If I look at my GE, my Dow Quartet, GE has taken a lot of time from the 32.30s high that it made at peak F way back in the middle of December. And now it's down at the 31.22 area. What, a point and a half? What a big deal. But at the same time, it is a big deal because the technicals have been weakening in the daily, and in the weekly chart, it's at 80%, the stochastic. The MACD is still good. So yeah, it's used time and a little bit of price movement, and the monthly chart is okay. So now let's look at IBM, the second in my Dow Quartet, acting very well, up 45 cents today, 168.34. Weekly chart, sideways pattern, looks very good. Monthly looks strong. What about Triple M? Triple M, in fact, oh, nice move up, $1.98. Oh, this is very good. This is a good sign. Nice action. So I'm just suggesting to you that this is a rotational market, that we're using time more than price. UTX has not done well. What's it doing today? Nice day today, up 66 cents. But its daily chart has gone to a peak F and pull back. Now the weekly chart has made a leg D, then a peak D, and now it's holding the 9-period moving average. So the weekly and the monthly are actually holding very well. I have to tell you, the more I look at some of these stocks, and the more I look at, say, the XLF, the more I'm saying, this has been a very good market. And even this sideways consolidation for weeks and weeks in many stocks has really used up more time than price. So now let's go on. We want to look at GC. We'll go to gold. Gold, as I say, fabulous action. Look at the MACD. Look at the stochastic. Stochastic at 90% in the daily. This is very good. Someone asked me about the GDX. We are along the GDX. GDX has acted beautifully. It's in leg C. It continues leg C. If today it touches 23.56 or goes higher. If it doesn't take that out, oh, it has. No, 23.56, 55. Yep, so far it's going to be a peak. See if it doesn't make it. But this is a really good action. MACD is good. Stochastic's at 88% of the gold miners. If you look at crude oil, I want to do crude oil here. This is in that chop. Remember, I said between the 51.49 area and the 54, 55s. I think it's going to be a sideways consolidation. If you look at the USA, which is the United States Oil Fund, not USA. USA is, in fact, Liberty All-Star Equity Fund. I must keep that in mind. So this is USO. USO, same thing. Just chop, chop, chop. This did go to a D. You see, we got a little divergence here. Oh, I think I discussed this, or I was going to discuss it. This is a fascinating thing for those of you who study the Chapman wave. Look at this peak C that was made here in the USO weekly chart, the United States Oil Fund, at $12.45 the week of the 10th of June. Look how it pulled back sharply, but within that it had an inside buy mode that went peak A, B, C, and the other day it went to leg D. That leg D was at $12 and exactly a round number, and it couldn't take out the previous C. So this becomes a C minus, but within it we've got a peak D. So USO, this tells me that, yep, chop, chop, chop in a sideways range. I'm missing high-grade copper. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, let me just finish the CDE, a rogue wave, F and a G, an A minus. All right, question I had was about BBBY, Bed Bath & Beyond. I think it looks terrible. I think it looks, there's a problem with it. So I see upside, it's at 40.86 BBBY, down 26 cents today. It had this Eiffel Tower. Look about it in the weekly chart. Not happy about this at all. What was the question Paul wanted to know? Can you look at BBY? Yep, I've got it right here. Oops, no. So within the context of what I'm looking at, the monthly chart looks very poor. The weekly chart is attempting to make the 39 support with the 43.27 very strong resistance. I don't like this. I think maybe it could bounce a little bit, but nothing more than a bounce. But if you're thinking about BBBY, drop a B. Just take one of the B's and dump it. And then, Paul, look at BBY. It's a better chart, Best Buy Electronics. It's not a great chart, but it's a better looking chart. Just in terms of chart functionality, I'm looking at this one that has the information that it's giving here says that the 42, oh, it's funny, it's the same thing, 44.42. BBBY was at 40, BBBY. So this is 42.39, BBY, Best Buy. Other one was at 40.92. So they're in about the same area. I would just say to you, BBBY is not a good looking chart. I think it's going to break down. BBY had a spectacular move going into the first 2 weeks of December, went to a peak F at about 48.9, and then pulled back sharply, just under 42. It's trading at 44 now, having hit 45s last on Friday. So it's a much better chart. To tell you the truth, I have a little problem in that the monthly chart is at a leg D, could possibly be a peak D. I think that the best selling period is over for Best Buy, electronics, etc. They have, they also have fridges and things like that. This is tough. I would not be looking at BBBY as a long. I might think of BBY as a bounce, but my thinking is that over a period of 4 weeks, Best Buy is liable to trade no more than about 46.70 to 47, but there's a better chance that it's going to retest the 42s, and if it takes that out, it's going to fill the gap, and the gap has a high of 40.60 from the 16th, and the very next session, the low was 42.55. So I think it will fill most of that gap over the coming, I wouldn't even put it into the next 2 to 3 weeks. All right. Now, what is Beyond? Bed Bath & Beyond. I think Bed Bath & Beyond, what they really mean is that it's beyond comprehension that they send you every week a 20% discount, and every time you go there, you forgot the 20% coupon at home. That's really what it is. So the next thing that I wanted to look at was I needed to look at, so we did crude oil. I wanted to look at high-grade copper as we went to the break. High-grade copper's had a nice bounce. Here's that rectangle that I drew for you a while back. It's still in the cup formation. I just think it's a high-level consolidation. I'm treating it as that. The monthly chart has improved a lot. Let's look at JJC. Is that JJC? I always get these wrong. iPath Bloomberg Copper, got it right. This is a peak A, B, C, D, E. Oh, you see, this is very interesting. This is what we've got in gold. Let me just double check. I don't want to speak out of turn. 28.41 and 28.40. Yeah, so that's an A, B, C, D. Peak D, just under the previous D. Now, this is fascinating because it allows me to teach a little bit here about the Chapman Wave methodology. When there is a peak D, underneath the previous, you remember we saw that in the peak C that was made in whatever chart that was just now that we were looking at, and I said, oh, look at this, an inside buy. It negates that it becomes a C minus because below that you had a peak D. So this is the same thing. So copper is saying to me, high-level consolidation, but it might have trouble going into the 32s and might have to test a 29, the low 29s, high 28s before it can get into the 32s. That's the way I'm looking at it right now for copper. And this is, we're looking at the JJC, the iPath Bloomberg Copper ETN. Remember, it's not an ETF, but an ETN paper. So now what we're looking at is we want to look at the dollar. I've been holding back on the dollar. Here we go. The dollar has a trend line that I drew a while back meaning I drew it about a week and a half ago. And that trend line has been the support level. It did take it out yesterday by a tad. You know what? I could even make that a little bit lower, like that. It did take it out by a tad yesterday. Today it's trying to balance. But everything about this chart, see, now what I would do here in terms of trend lines, I would treat that, I'd make that green, because if you break above it, that is a positive. But most importantly, now I can put in an inside, Chapman Wave inside track that says, right there, that within the context of this particular pattern, until the dollar can get back into the 101.50s and then snap into the 102s, this is just going to be a consolidation after a huge move to the upside. So peak G, I'm calling it for now, G/C, but probably a G in the weekly chart, leg D in the monthly chart. Maybe it'll make a peak D. We'll see. The month is really young. It came smashing to the downside yesterday because comments were made by the future president, and he had said, "What's with the dollar being so high?" No, he said, "What's with the dollar being so high?" So this is what we've got to be careful of. That words within the context of already being in a sell signal to sell mode in the daily. I'm probably going to say on Friday that if this continues lower, I'd have to go to a sell signal in the weekly chart. So sell mode in the dollar daily. Not yet a sell signal because I have to wait for Friday for confirmation in the weekly chart. That means that gold, and now we can go to gold because I wanted to explain to you about the patterns we're looking at. Gold has gone to a leg E. There's a left side, right side price time match. And in fact, oh, did I use it on the other one as well? I think I did. So this is still a single leg A to the upside in the weekly chart. Remember what happened the last A? It collapsed. That was the one back in November the 11th, the week of the 11th at 1340.19, the continuous contract. It did come down a little bit. It went from that level to 1124. I'd say that that's quite a bit. And now what we're looking at is we're looking at a situation with the weekly chart technically needs to see the MACD close sharply above. Can in the next 2 days there not be a consolidation in gold and in fact go slightly higher into Friday's close so that the weekly chart MACD actually closes positive, or will it deflect lower? That's a big question. EUR USD, there we are, has had a really nice move like gold. This is in leg D, gold is in leg E. So this is very interesting because it too has a leg A to the upside, and it's waiting for the MACD in the weekly chart to cross positive. I'll be back. Basil Chapman, Tiger Technicians out. Dow's down 18, S&P's up 1.37.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So the question is about the yen. So USD, JPY, the United States dollar, Japanese yen, currency pair. Let me just double check. Was that 118,658? 118,60. Yep. So that's a failure. So there was an A minus. So that made a peak E in the Chapman wave on the 15th of December at 118.658. It's gone trough A, trough B, trough C, trough D, leg E today, and there's a left side low bar of 111.348. The price, it says by tomorrow or within a day or so, there should be a test of that level. And here's the Chapman wave inside wedge, target support line. Usually I make that pink on the way down. And the real issue here is I don't see a big upside move because of the way the stochastic is down at 10% already. MACD is still negative, but I do see some basing activity coming up real soon. So I think in the 112 area, might have to touch 111 something, but 112 area should see, let me see, 120-minute chart. Yeah, we're already there. So it's attempting, might have to make an H pattern here. It's attempting to find some kind of a base. More sideways than price after 118 something to 112 is 6 points, but that's only 4.5%, 5%. So it's really used more price than time than price. But we've got a peak C1, C2 in the weekly chart. MACD's turning down, but still good. Stochastic's at 85%. But turning down, and the relative strength is a little bit weaker. So I'm suggesting to you that it's just, you're looking at time, it's a leg A in the a gray A in the monthly chart, and as a result, I'm just saying to you that the yen has gone pretty much together with the dollar. Dollar's consolidating, the yen's consolidating, so it's really the EUR USD. This is the currency pair that you need to watch. And so far, the MACD is strong, the stochastics at 85% and attempting to hold. And here you've got a very close move to the upside where the MACD in the weekly chart is. The histogram's improved a lot, but the MACD hasn't yet crossed positive, and stochastic is moving higher. It's not fantastic, but it is moving higher. So I think there's a little bit more upside. And if the euro-dollar currency pair trades in the 1.0806 area at any stage and holds there for a period of maybe 3 to 4 bars, hourly bars, there's a real good chance that the next move up will try to get to 1.087, the high of the 8th of December. So this leg D, this is a very important area, and it's suggesting even the 120-minute chart A, B, it's kind of held. Yeah, it's just suggesting that right here is where you're trying to find some support in the dollar. The gold is getting a little choppy, and I would not be surprised over the next few days we get some choppy sideways action as gold consolidates a little bit. Dollar tries to bounce. Yen also consolidates some, and the euro has a little bit. EUR, USD. Yeah, so the euro is going to get a little choppy over the next week or so, 2 to 3 sessions. Next week, we will start to see either the move continues in the dollar down or we get that reversal. I would not be surprised if next week we get some kind of a gold consolidation. That's just the way I'm looking at it now. The IYT question, yeah, IYT is holding, is making an H pattern. Same thing. Holding pattern, had a spectacular move, just going sideways. Would not be surprised if the sideways move in a choppy 3 points up, 3 points down, no, 2 points up, 2 points down pattern continues just a little while longer. And Sarah wants to know about Goldman Sachs. Goldman Sachs made a peak. This is so fascinating. 2 days ago on Friday was leg E. Yesterday was a sharp down move in Goldman Sachs at 233.38, down 236 today. But it's leg D, a possible peak D in the weekly. Now, I said to subscribers today, I don't know if I had it last night already to buy the FAZ, the 3 times short, the XLF. I just don't know if it's really worth it because we might see slightly lower prices after all. Look, Bank of America, leg a peak D in an alternate wave count. Look, this is how I got into the instant restart. They can go to a G/C, and then later you get the D because you can't go H. There's no H. So above G becomes a D. And Bank of America is it. Look at Wells Fargo WFC. Peak F at 58.07 on the 8th of December. And it's pulled back, trough A, B, C. It's like trough C here, taking a lot of time. If you look at the weekly, that's a pretty big move from 58 down to 53, 5%, 10%. So, yeah, this is a consolidation. How much further it has to go is the real big question. MS is Morgan Stanley, makes its peak G, and then it does this interesting thing. See, look, ABC, this is the instant restart. Oh, this is a little lesson we'll do. Let me do, what's the time? We got Rich in Portland. Hi, Rich, how are you?
Good, Basil. Thanks for taking my call.
My pleasure.
I have a question about New Gold, symbol NGD.
NGD. All right. NGD, New Gold Inc. trading at $4.17, up 1 penny. Let me just put my up arrow right there. And let me just count the waves. So it goes A, B, C, D, and you also have an E, right?
Yes.
Okay. Do you have a position in this?
Currently, yes.
Okay. So now let me do a couple of things. I'm going to ask you, did you get in the mid threes or lower? Yeah. Okay.
No, so the upper threes. 390.
390 is a little different. Okay, so the 9-period moving average is at 399, and it's just about to cross the 200-period exponential moving average, which is almost at the same level. What's really important about this, the MACD is strong, the stochastic's now flat. You see what happens, and this is another little lesson. In the Chapman wave methodology, what we try to find is when there's a price move that has the stochastic go towards 80% or higher, if the price doesn't hold and it pulls back, if the stochastic goes immediately from over 80% to below 80%, you have to be careful. When the stochastic holds flat and every pullback is just like an eye blink, it doesn't even notice it in the stochastic, this is very positive. So even though it's a leg E, and it's between the 200-period smooth moving average, this little light blue line there, and the gold, which is the 200-period exponential, I like it very much. What's really important about this is, so the question is, where would it pull back to? And 399, as I say, is the 9-period moving average, 389. I would not be surprised if there is a consolidation next week. There's just a sudden slide in the gold stocks, And this is one that could go from 417 to about the 395, 385 area, and then build another base so that the weekly chart can start the next move up. So the question is, what would you do? And I'm going to say to you, it really depends on your outlook. We've got a break coming up. I think there are a lot of people in exactly your situation. So, Rich, if you can hold on, my thinking here is that it would be nice to hold on, but I just want to give you parameters and give you an idea of what you can expect if I'm correct. I'll be right back, folks. Dow's down 23. S&P is up $1.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, this is now very interesting because we've got at $4.17 up 2 cents NGD, which is New Gold Inc., trading at 417 up 2 cents, is nicely above all the moving averages. So, you know what I'm thinking, Rich? Because gold has had such a really strong move, and the dollar's had such a strong move up, and now it's pulled back, and all the time the dollar was moving higher, gold seemed to be in its own independent orbit. I'm going to suggest, oh boy, this is tough, that you really don't do anything about taking anything off. Normally, I'd say take a little bit off. It's had a spectacular move going from $3, just about $3 to over $4. I mean, that's a huge 33% move. What I'm going to say to you is I'd rather be patient, hold the stock. I might even think of adding to this position. It'll be a shame if you have to add to the 380 area. But because you got in a 390-ish, You could take something off now for a shorter term profit, but what happens if it only pulls back to $4.09? Or what if it even pulls back to your entry point, and within an hour or within a day, it suddenly spikes much higher and goes towards the 200 period simple moving average right there at $4.33. So I'm inclined to say to you, you got in. I would recommend you hold it. You might even want to add to it if it goes underneath 390. Maybe in the 380s, and that could be, you could then reverse the roles and have the new position at the lower price, your core position, and if it ever gets back into the 425, 430 area after that, you could treat your first entry point as your trading position and try to keep your core. I'm thinking along those lines. I don't know if that helps you, but that's kind of what I'm thinking.
It does, Basil.
Good.
All right, thank you.
Thank you for calling. Appreciate your call. So, folks, I had a question about Exxon. What's the wave count of the Chapman wave? Well, Exxon, XOM, trading 86.68 is down 68 cents. It made a PT way back in December the 13th. It pulled back in a kind of a zigzag, like in the traditional lightning bolt. It went under the 200 period moving average. I'm suggesting to you now that this is kind of stuck. It has limited upside at 86.68. Now it's the 87.80 to 88.60 area is going to be the real test of strength if it can break upside above that. I'd be real nervous about Exxon if it broke under 85, 86. If it broke under 85, closed under 85.50, then that little isolated island reversal from the 29th at 85.08, that becomes your downside. Then you've got a lot of support levels. But now the question is, would I short, buy or short? I'm more in the category right now to say I'd be shorting it, but I wouldn't short it at 86.67. I'd prefer a test of 87.32, the 9 EMA, that fails and comes back under 87. Then I'd say, now it shows weakness. So, yeah, I think more downside than upside at this particular point for Exxon. And CVX, when I looked at it the other day, was a little stronger. Yep, it's a little stronger than Exxon. It's held very nicely at a peak F1, F2, F3. It's a whole series of highs that couldn't break 118.99. So I'm going to just say CVX is the better one. And I said some time ago, I think CVX as a dividend stock out of the two of them is probably the one I'd look at better. So just to wrap up, because we're about to go, now you're going to have your swimming lesson and great shows coming up for the rest of the year. Don't forget Tom's webinar coming up in a week's time. Should be fabulous, talking about the 300% long and short gold, the nugget and the dust. Anyway, so what I'm looking at here is be very careful. I think that this is a vulnerable period. I think limited upside. I'm thinking that that my 120-minute chart is correct, and that the 120-minute chart says we should be going down a little more, and that we're going to take out 19,700 as support. Would it be by Friday? I'm not sure, but that's kind of the way it's looking right now. Limited upside, slightly lower lows on the downside. Have a great day. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.